Very good morning. You're watching Buy Now, Sell Now on ET Now. I am Snehi Shah. With me is Cheryl D'Souza. And viewers, this is a show where we'll be addressing all your stock-specific queries with our experts on board, two experts that we'll be bringing on board quite shortly. But before that, merits to take a look at the market because, you know, big headlines early this morning, and we've only been talking about tariffs. That is the big news of the day. But the markets seem to be taking it really well today. In fact, on the bottom of your screen, you can see the recovery in the broader market, 0.7% uptick coming in from the day's lowest point for mid-cap, 1% recovery for small cap. So, Cheryl, at least broader markets are holding up well, and similar could be said for the Nifty as well.
Absolutely. No points for complaining at this point in time, actually, Snehi, given the fact that, yes, we've seen a healthy recovery for the benchmark indices from the day's lowest point. Broader markets also recovering. You also have Nifty Bank that is in the positive territory. Pharma index is roaring in trade, seeing the biggest intraday gain since September 2020. You have the advanced decline ratio, which is very much tilted in the positive territory. So yes, you had this big date that was hanging, or a big overhang for all of us. That was April 2nd. It's come, it's gone. We've got the retaliatory tariff. The Liberation Day is done by Trump. 26% tariff coming in on India. That is a reciprocal tariff. But it has impacted a couple of sectors, like the chemical space is under pressure. You have the IT index that is under pressure in trade today. You have some of the shrimp exporters that are under pressure. But you also have some bright side also, pharma. Everyone was talking about pharmaceuticals being actually hit by the tariffs, and that one has escaped this time around. So you have the pharma index as the top sectoral gainer, 2.8% uptick coming in the pharma index. You have Sun Pharma, Cipla, Dr. Reddy's, Lupin, Aurobindo Pharma, all of them seeing really strong gains in trade today. Talking about some other gainers then, apart from pharma, you have Shriram Finance, which is seeing gains of about 2.3%. Ultratech Power Grid also holding on to positive territory, while on the flip side, like I said, IT is under pressure. So you have your top 4 Nifty losers from the IT pack, namely HCL Tech, TCS, Infosys, as well as Tech Mahindra. And you have Bajaj Auto also that is under pressure in trade today. Remember, Bajaj Auto came out with its auto sales numbers also earlier this morning. Talking about the sectoral front then, it is pharma top sectoral gainer, PSU Bank holding on to gains, while it is IT, metals, auto, they are the ones under pressure. And remember that these are primarily global or global facing sectors. So they are the ones that are under pressure in trade today, Shrishti. So I beg your pardon, Snehi.
So the tariffs have got us in a jiffy, and clearly Cheryl, you too as well. But well, yes, lots to talk about in today's show. Other than your queries, let's also bring on board Sharmila Joshi as well as Kunal, and first discuss what the tariff impact is going to be like. We'll have them joining with us shortly. But also on that note, let's just quickly take a look at some mid-cap stocks that are doing very well. Kunal, case in point being the pharma pack that, you know, Cheryl has spoken about. So pharma is doing good. IT on the flip side, on the other side of the spectrum, doing very badly. Somewhere in the middle is this entire FMCG pack today, and the biggest loser, in fact, from FMCG is Dabur today, on the back of a very weak Q4 update coming in. Fundamentally, you know, the FMCG pack has been spooked for quite some time. Rural is, you know, on the way of recovery, but urban is looking shaky. On the charts, what is Dabur looking like to you? And overall, what would you make of the FMCG pack? Since it's not very exposed to the US tariffs, so it's somewhere in the middle. On the charts, what is the pack looking like to you?
So I think we are now at a point where, Snehi, that most of the FMCG stocks are coming at a value buy. So I think price-wise, for example, Dabur, even after this 5-6% kind of a cut, the stock is seeing today 460, 465 levels for Dabur. I would actually believe that this could actually be a good territory for traders to start going for a contra long, because we've seen historically that whenever the FMCG stocks go into a 30% kind of a correction on a 6 month to 1 year basis, they've actually become good points where long-term investors have benefited. Now it may not be the exact bottom for those stocks, but then when you look at this relatively, say over the next 6 months, 1 year, 2 years kind of a time frame, then these price points could actually become as very good value points for long-term investors. So it depends on your time frame, on your portfolio construct, but I believe that FMCG stocks at current levels could be a good add into your portfolios.
All right, so that's the take coming on the FMCG space. We have also Sharmila Joshi joining us. Good morning, Kunal. Good morning to you, Sharmila. And it's been a very hectic morning, hectic overnight also for most of us, since we've been all glued to the screen watching the headlines coming in from Donald Trump. And what do you make of this? Healthy recovery coming in for the markets. Do you think it is just the fact that we've heard so much, now we are like, now let's relax and take it easy?
Yeah, I mean, we've been ever since we've heard about the word tariff, market has been doing its gyrations. So that said, I think some of it was sort of more than what market expected, while some of it was in line. But I think net it's what you're saying. It's just that we've been dealing with this concern for so long, and markets have reacted, negative negatively to it. Then they've gone up a bit. Then we've had year end. Then we've had this. Then we've had that. So I think markets are ready to factor it in, and it could be negative in terms of actual numbers for some companies, but that remains to be seen. So I think from now on, perhaps maybe give it a little bit more time, but then we'll sort of move on and then focus on earnings, etc., which to my mind is the way it should be. And let's see how markets play out. But I think looking at the market today, by and large, it seems to be that market has taken the tariffs in their stride.
The other side of this is the fact that we're talking about the other Asian exporters like China, Vietnam, Thailand. They've been hit by higher tariffs when you compare it to India. So that also one of the reasons why you have the sentiment booster, right?
Wouldn't want to look at it like that, frankly, because I think that you also have to look at what is your net. What is it that you're actually importing and exporting from the country? So maybe there in some of these countries it's a little different than what we are doing, and which is why the tariffs there have been higher or whatever, and how the prices could be lower going into the country. So how it will actually end up impacting them as vis-a-vis us, we don't know. So some of it seems logical, some of it seems illogical. Some of in the sense what different countries have been taxed, but they know best in terms of what they are doing. And I think we really need to now just focus internally on what it means for our companies, for us, and really look more at earnings as well as valuations going forward. Because I think from last year, September, October, the kind of corrections that we've seen, a lot of the froth has now been removed from the market. So I think it's time that we sort of focus more internally on what things are happening than really a lot of the external factors, to my mind, are now played out.
Okay, so that's the take coming in on how you should be approaching the markets going ahead amid everything that's been happening globally, and especially on the back of these Trump tariffs. But on that note, we'll slip into a short break, and viewers, when we return, we'll start addressing your stocks or related queries with both our experts. So keep writing to us, and we'll be right back from this short break and begin taking your queries. Hi there viewers, welcome back to Buy Now Sell Now. Before we start addressing all your queries, just a word of caution. That's the number that you can write to us. 865-797-4571 is our WhatsApp number. So keep writing your queries to us, and we'll keep addressing them with both our experts. Just a quick word of caution. When you write your query, please very clearly specify what is the name of the stock, what is your exact query, and what is the holding period since you've been holding the stock for, and what was the buy price at which you purchased the stock, and what's the exact query you want to get answered. If the query is about a stock that you want to inquire about or you want to prospectively hold in the future, then mention the name of the stock and what is your holding period that you are looking for. But on that note, let's kickstart this segment where we start addressing all your viewer queries, and we have Kunal and Sharmila on board with us. Let's begin taking all of these queries, and Kunal, let's come to you first, because this is a slightly technical query in nature. Our viewer Bharatwaj is writing to us from Coimbatore. He's asking if they can buy Shriram Finance at the current market price for long-term investment of 3 to 5 years. And after that, what's the kind of target price that you are penciling in on the charts for Shriram Finance?
It's a good stock to buy at current levels. I believe that the entire NBFC pocket is going through a big turnaround. Shriram Finance has been one of the strong names in that sense. Now, if you're looking at it from a long-term play, I would look at say 720 as the first target. The stock should be able to break or breach past about in the next 6 months to 1 year, and potentially above those levels. You can expect that if the entire market also starts to stabilize, then we may expect at least another 8 to 10% further upside for the stock.
Okay, so expect 8 to 10% further upside from those levels is the take coming in on Shriram Finance. Sharmila, coming to you, our next viewer query is coming in from our viewer, Mr. Padma Sivara, who's writing to us from Bangalore. And three stocks in question, in fact, SBI, DLF and LNT, the stocks that are usually considered to be safe and all large caps. So what's your view on these stocks, and do you believe that these are the best bets to ride out the market volatility that we can expect to see over the next couple of months on the back of these tariffs playing out? So stocks in question once again, Reliance, SBI, four stocks, pardon me, that's Reliance, SBI, DLF and LNT. What's your view on all of these stocks?
Well, the view is positive, and I like the way the investor is thinking that you need to ride out this sort of rough patch, and then which could be the sectors. And so I would really look at it more than stock specific, the sort of sectors that the investor has selected. So I think all are great sectors, because let's come to Reliance first. There would really be, you would be challenged to find a company in the Indian context which has, the kind of umbrella of coverage that Reliance does, and you would only find probably global plays which are into so many varied sectors. That said, I think the kind of numbers Reliance has been giving out, and the fact that among the large cap, most of these are large cap, L&T, SBI, as well as Reliance. And these type of companies do reward retail investors in the longer term. So if the long term is what you're thinking of, I think all these three names make a lot of good sense. Because for the markets to go up, you do need a lot of participation from financials. So SBI would come in. Also, I think capital goods as a sector, with the kind of order books they have, as well as the outlook, L&T is a very strong name. That leaves you with DLF. DLF again belongs to a sector which is the real estate sector, which again, to my mind, if you're looking at Indian market in the longer term context and you're expecting it to go up, then real estate as a sector has a big role to play in that. And from that point of view, DLF again makes a lot of sense. So yes, I just like the way the investor is thinking, and I don't know whether these could be the best names. But certainly, as I said, the stocks names per se are good, and I like the way the investor has thought this through.
All right, so that's the view coming in when you talk about the large cap, the quality large cap, which Padma Sivarao is looking to invest in at this point in time. Kunal, let me come to you. This is from RK, who has about 200 shares of Dabur, which he's purchased at levels of around 580 rupees per share. He wants to know whether he should add to average it, or should he go ahead and book loss. Dabur today is actually reacting to his quarterly update, and that's one of the reasons why the stock has seen a nosedive in today's trading session. But what's your take on Dabur holding? He is in loss. What should he do?
I think you should hold on to the stock. As I said earlier, that it's a quality stock. It doesn't warrant you to look at this as a short-term play. And my assumption is that you're looking at this holding for Dabur on the longer-term charts. Yes, the stock may take some bit of more time. It may go into a time-wise consolidation. But then I think these price points and these kind of data points which emerge into the stock price, they actually become good buy territories when you look at this retrospectively on a long-term basis. So I believe it's a good territory where you can look to even add further, but then be ready for holding the stock from a long-term play.
Okay, so that's the take coming in on Dabur India, and positive outlook coming in from Kunal. But let's just shift focus once again and talk about tariffs, because among the first reactions from North Block, here out MOS Finance Ministry Pankaj Chaudhary's take on tariffs and what he's making of this entire situation.
देखिए यूएस का काम है, उनका अमेरिका फर्स्ट है, ट्रम्प साहब का, तो मोदी जी के लिए इंडिया फर्स्ट है. अब उसकी हम लोग समीक्षा करेंगे, फिर क्या उसका असर पड़ेगा, कैसे उससे निपटना देखा जाएगा.
तो भारत का हर नागरिक कब तक पेंशन योजना के अंतर्गत आ जाएगा सर?
प्रयास है कि जल्द से जल्द लोगों को लाया जाए.
और सर आगे की रणनीति गवर्नमेंट की क्या होगी यूएस टैरिफ?
अब जरा टैरिफ देखा जाए, उसको फिर विचार किया जाए, फिर देखा जाएगा क्या करना होगा.
All right, so that is the MOS Finance who's talking about one of the first reactions coming in on tariffs, saying that America first is US President's vision, while India first is Prime Minister's motto, and the government will review the reciprocal tariff announcement and its impact, and the strategy will be prepared after examining the announcements and actually taking a closer look at that. But let's move on and let's continue taking your queries then. And this next one is coming from Nikhil. He's writing to us from Mumbai. Kunal, he has 70 shares of BPCL at a price of 289 odd rupees. Also, he has some ITC hotels, which he's purchased at the levels of around 205. He wants to know what's the right time that he can look to exit these counters.
No, I think it's a good time to hold on to both of these names. BPCL specifically, I think the stock is trying to make a turnaround of sorts on the short-term charts, and if this rally sustains for the stock, I would actually expect the stock to come back towards 320ish kind of zone. Depends on how crude oil prices move, as well as the short-term outlook on the index, whether we see any kind of a negative news flow or not. But I think overall the chart patterns are quite positive for BPCL. I would suggest to hold on to both of these names.
So hold on to both ITC Hotels as well as BPCL. That's the take coming in from Kunal. Let's move on, talk about our next query. And Sharmila, this query is coming in from our viewer Subrata Mukherjee from Kolkata. And he's asking if now is the right time to buy REC and PFC for the longer term. What's your view on both of these stocks?
Well, it's a sector that I like, and again, these stocks have corrected significantly with the rest of the mid-cap play. So from that perspective, I think yes, this could be a good time to buy both REC as well as Power Finance. What I would though recommend is that the valuations don't look exactly cheap as of now. So wait for the numbers, see the outlook, and then look to buy. But overall, it's a sector that I'm positive on going forward. So why not? And the correction has been quite significant in both the stocks. So they are now at more reasonable levels than they were earlier. So they could be looked at.
All right, let's move on then, and let me take this query coming in from Sundaresan. He wants to know, okay, so he has his primary investments are into the IT and the pharma space. He's saying both of them are in profit currently. He wants to know how should this affect his future profits, Kunal? A very tough question coming in. But one thing is good that he is in profit in both of these sectors. He's not mentioned the stock at all. He's not mentioned which stocks that he's invested in. A lot of things transpiring right now, but on the charts, how is the near term or medium term looking for the IT index and the pharma index?
So I think maybe the worst or the first part of the the worst price correction for the IT index is now behind, because I believe that now we could be in for some bit of more time-wise consolidation, maybe some pickup in individual stocks, because on the chart specifically, the the Nasdaq composite is now starting to form a bullish RSI divergence. It has a direct correlation with respect to the Nifty IT index, and I think in that sense there could be a possibility that we may see some bit of reprieve coming back into the IT stocks. And pharma stocks, I think we've already seen that many of the pharma stocks today have seen good pickup of price action, but you have to be a lot more specific on what you're buying. I think of what you've already bought. Sticking to large cap names and this kind of a trend where the news flow is a lot more heavy into these stocks is always a beneficial strategy, because they are the ones which tend to shield your portfolio, and a good part of the impact would probably be felt more into the mid caps and small caps in these sectors also. So sticking to large cap names in both of these spaces from long term play is a good strategy.
So stick to the large caps in Nifty, IT and Pharma is a safer bet coming in from Kunal. Sharmila, coming to you, our next question is coming in from our viewer RK, who's a long-term investor. His query is about KPIT Tech, where he holds 120 shares, and Persistent Systems, he holds 20 shares of that, and 100 shares of Voltas. So KPIT Tech, Persistent and Voltas. He's asking, should he add or average it out or book his loss, and what are you making of all these three companies?
I think I may have recommended them at some of the other point, some of the other time. KPIT Tech and Persistent, post the kind of corrections that they've seen, are now in terms of valuation looking fairly attractive. But in terms of buying fresh, I wouldn't really recommend right away, because I think as Kunal said, I think maybe the focus should be on large caps for a bit. And again, we are sort of, we'll soon in a couple of months start hearing of earnings and how really US markets are reacting to everything that is happening around them, because there could be slowdowns in terms of orders or things like that. So I think it makes a lot of sense to just hold back any fresh purchases. But that said, now the valuations are looking attractive for both Persistent as well as KPIT. The third stock is Voltas. I think that is more domestic facing. And here we've seen a rally, in fact, from much lower levels when Voltas was actually losing market share to both to Blue Star and competition. Now they seem to have recovered some of the lost ground. That said, I think here too the concern would be on what kind of do you continue to see the kind of sales numbers that they have projected, etc. So once again, not a very positive view, but more probably more positive on Voltas than on the other two at this point in time. But from a valuation perspective, the other two stocks look better. So all three stocks that I like. If I had them, I would hold them, but I would not buy fresh in any of these.
All right, so that's the take coming in on all of those counters. Moving on, this one is coming from Girish Iyer. He's writing to us from Trivandrum and he's asking about Avanti Feeds, 1,500 shares at a price of 903 rupees per share. Yes, Girish, one of your part of your question is this a result of the tariff issue? Yes, because maximum of their exports are to the United States for Avanti Feeds, and that's one of the reasons why the stock is under immense pressure in trade today. And you can see that knock on Avanti Feeds stock price in today's trading session. Kunal, he's asking you a very tough question. By when can he see recovery in the stock price? But what's your take on Avanti Feeds? What should he do at this point in time? Because yes, it is hammered out of shape on back of the tariff.
Yeah, it's hammered out of shape because of the news flow. Difficult to say, I think, when the stock would recover. But then I think when we look at this, stocks have a capacity to try and absorb this kind of a news flow. So, for example, Avanti Feeds in the last 2 months was not something that the stock was going into a negative downtrend. In fact, the stock made a base of 700, moved up to 960 thereabouts in the last 2 months. So it's what it did in the last 2 months in terms of the rally, it's just going through a mean reversion phase. Maybe there could be a chance that the stock may fall below the 720 mark, try and just about dwindle around the 200-day moving average. But once the stock goes into a time-wise consolidation, there could be a very strong case which could be built that maybe the stock could get back into a recovery. But difficult to say when that could happen.
Okay, and nobody knows when Avanti Feeds is going to recover because the fundamental that's hitting it, the news flow on that back of tariffs is quite strong. Like Kushal said, most of their exports are to the US, so that stock continues to be spooked in today's trading session. Sharmila, coming back to you, next query coming in from our viewer Thomas George, who's writing to us from Kochi, and he's asking about prospects of Laurus Labs going ahead. He has bought 300 shares 4 years ago at a buy price of 365 rupees per share. He's asking, can he continue to hold it for 2 to 3 years? He can do so if required, but would that be your recommendation, or should he book partial profit and continue to hold the remaining of his holding in Laurus Labs? So what's the view coming in on Laurus Labs?
Well, the valuations look okay, but given the fact that he's bought at such an attractive price, I think it always makes a lot of sense, in this kind of a market to partially book profits. So that's what I would recommend: partially book profits and then continue to hold maybe on half your shares and then continue to hold the other half. Because as I said, you bought it at a very good price. It has been through a lot of troubles, in fact, in the last couple of years, but it seems to be recovering from there. Valuations look okay. So, as I said, it makes a lot of sense to just book partial profits.
So that's the take coming in on Laurus Labs. Venkat from Chennai is writing to us and he started accumulating Canfin Homes, Kunal. Presently, he's holding about 100 shares of the company at a price of around 588 rupees per share. He wants to know whether he should continue accumulating Canfin Homes in his portfolio, as well as what sort of a target can he look out for this one.
Yeah, it's a good stock to accumulate, and I think the best part is that the prices have also been a lot more attractive at current levels. As I'm looking at the charts on the long-term basis over the last 10 years, the stock has this tendency of coming back towards the 20-quarter moving average before it resumes the uptrend. Currently, the stock has already done that. Last quarter, when the stock was down sub 600 levels, it's managed to retrace to that kind of a strong moving average support, which means that now we are looking at the potential cyclical upside for Canfin Homes. And historically, whenever that has happened, in the next subsequent, say, 2 to 3 years, the stock has come back to the all-time high levels and managed to cross above those zones. So, which means currently from levels of 600, 670 where the stock is trading right now, we could be looking at the next 2 to 3 years as a potential target of 950 plus for Canfin Homes.
Okay, so optimistic target coming in for Canfin Homes going ahead from Kunal. Sharmila, coming to you, our next viewer is Ram, who's writing to us from Mumbai. He's holding 100 shares of Hindalco at a buy price of 660 rupees per share. The stock price is nominally lower than his buy price right now, and he's asking, please advise your view for the next 1 year. He can hold on for 1 year, but would that be recommended when it comes to Hindalco?
I think you can continue to hold for a year, and the near term is going to be volatile. There's no getting away from that. because metals as a sector does tend to react globally to to what is happening globally, and that picture is a little bit askew just now because of all of this whole tariff talk, etc. So you will need to allow for all that to settle down. That said, Hindalco with their acquisitions as well as their the requirement for aluminium, etc. going ahead, to my mind is a good long-term play. So I would recommend staying invested in Hindalco for the long term.
This one is coming from Amit. He's writing to us from Surat, and his query is on sale, Kunal. He has about 3,000 shares at a price of 117 rupees per share. He wants to know whether he should hold or exit this one. What should he do?
Will definitely hold. In fact, after the last 2 months or 3 months of the rally for the metal index, I would believe that sale would eventually come back into a breakout mode. So it's a matter of time when you see other peers moving up higher. The steel majors, the JSW Steel, Tata Steels, Hindalco, Jindal Steel, etc. When you see many of the other peers, they've moved up higher. Eventually, there would be a point where sale would start to look attractive. I think we have already started to see signs that the stock is recovering from its major lows of 105, 110 levels. So I believe current levels is an attractive bet where you can hold on to sale.
Okay, so hold on to sale, looking attractive right now. Let's move on, and Sharmila, next query is coming to you from our viewer Krishnan, who is writing to us from Goa. He's holding 150 shares of ITI Limited at an average price of 268 rupees per share. The stock is at 252 right now, so nominally lower than his buying price, and he's asking if this is okay to retain for 6 months in hopes of a profit. What's your view on ITI Limited?
Well, since his loss is quite marginal, and because 6 months to my mind is not the optimum period you should be holding the stock for, but since your sort of loss is a little minimal, you could continue to hold the stock because in terms of valuations, it's looking very decent now.
So that's the take coming in on ITI. The next one is coming from Krish. He's writing to us from Chennai. Kunal, this one is for you. Oberoi Realty is the stock that he is asking the query on. He has about 90 shares at an average price of 1,981 rupees per share. He wants to know whether it makes sense for him to move out of Oberoi Realty now and actually look at Phoenix Mills. Also, he's saying that he finds Phoenix Mills to be better overall when you talk about price action, and his outlook is for 3 years.
Yeah, chart-wise, Phoenix Mills is a better chart, but I'm not sure whether switching completely out of Oberoi Realty into Phoenix Mills could actually turn out to be a good strategy, because Oberoi Realty at current levels could actually be at a very attractive risk reward. Now there comes a point where stocks establish within a sector are leader stocks. Phoenix Mills, of course, is relatively very strong in terms of price performance, but then there also comes a point where the underperforming names, at least on the last 3 to 6 month scale, they would also try and pick up the beta or the momentum for themselves. So I believe that having a right mix of both of these stocks could actually be a good strategy.
Okay, so have a right mix between Oberoi Realty and Phoenix. Both of these stocks looking good to Kunal right now. But on that note, we'll slip into a very short break, and viewers keep writing to us on this WhatsApp number, and when we return, we'll keep addressing all your queries. So we'll be right back. You don't go anywhere.
Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get to answers for all of your stock-related queries. Let's continue taking your queries. In fact, a lot of queries actually pouring in today. Let me take this next query, and this one is coming in from our viewer. That is Venugopal Reddy. K. Venugopal Reddy is writing to us from Hyderabad. He wants to know about ICICI Prudential, if it can be bought or average at current market price for a period of about 6 months. Kunal, he's bought 7 shares at a price of 772 rupees per share.
See, you can look to buy ICICI Pru at current levels, but there are better charts on a relative basis. I think HDFC Life is one of the stronger ones. From the life insurance pack, you have SBI Life, which is also trying to be a more of a the second rung stock in terms of price performance. So I think it makes sense if you can add on to other names in terms of the leadership, because if the markets or if the entire insurance space goes into a big recovery, the leaders or the ones which have been more relatively strong, they're the ones which could move up higher. Look at it relatively, also that HDFC Life is almost like 5-7% higher than its 200-day moving average. ICICI Pru is almost 10 to 15% lower than its long-term moving averages. So the divergence is quite stark. I would suggest that switch on to HDFC Life. That's a much better option.
So Switch to HDFC Live from ICICI Prudential. That's a take coming in from Kunal. In fact, Kunal, next query also coming for you only. This is coming in from our viewer, Mr. Arvind, who's writing to us from Kolkata. Stock in question is IDFC First Bank. He holds 3,000 shares bought at a price of 91. Now, the stock has taken quite a hit from those 91 levels right now. He's asking if he can average at current price or should he hold in hopes of any signs of price increase. He's also saying the stock is showing good volumes today. Is that something that you're also spotting on the charts? And what's the outlook, a one-year target on this stock, and if he should continue holding in hopes of any reversal in the fall that the stock has recently seen?
See, I'm very bullish on IDFC First Bank, and I think over the last 1 to 2 months, I've been mentioning that the sell-off the stock has shown in the last say 2 years, 2023-24 specifically. I think it's been going into an extreme. Now the indicators on the quarterly charts have come back into significant lows for IDFC First Bank, and there are a lot many other technical indicators which indicate that levels of 55, 60 thereabouts has been a major base formation for IDFC First Bank. I strongly believe that this could be very good territory for you to go for a buy or an average further if you've bought at higher levels, and have a time frame specifically of at least 1.5 to 2 years, because if the cycle turnarounds for IDFC First Bank like what we've seen in the historical charts, wouldn't be surprised that the stock actually hits the 3-digit mark also.
All right, so that's IDFC First Bank, which Kunal is pretty bullish on. Let me take this next query coming in from Vijay. Wants to know about IOC and ONGC. Sharmila, he wants to know whether it makes sense to go ahead and accumulate these counters right now or wait for a correction. He has IOC at a price of 115 and he has ONGC at a price of 234. His plan is to hold for the next 5 years.
Well, 5 years is a long period, but overall, this is a sector that I'm not too fond of, because I think that when you're talking of a sector which is where your inflation is very closely linked with this as a sector, and which is why I think that you really don't have, even if you say that you have a free pricing, you don't really allow it to be a free pricing, because otherwise when crude prices fall down, you have some other tax on it, and so on and so forth. So I would just rather be in some other commodity which is not so, I would really want to leave oil and gas and sugar out, because they are very closely monitored, because inflation depends on both these commodities a lot, and you are not really allowed too much of a leeway beyond a point. So these are sectors that honestly over a period of time I'm just avoiding.
Okay, so that's the take coming in on both of those names, IOC, ONGC, and the overall sector they belong to as well. Kunal, coming back to you once again, we have our viewer, Mr. Radhakrishna, writing to us from Bangalore. He's holding 100 shares of CDSL. His buy price was 1,400 rupees per share. He's saying, he's asking if he should continue to hold or book loss. His holding period is 1 year. And he's also asking you for a 1-year target, if you could let him know where you see CDSL headed for the next 1 year. So what's your take on the stock?
So I don't see any reason why you should not be holding on to the stock, and my only concern is that why restrict yourself to 1 year, because CDSL is a fantastic stock to own. The stock what the stock has shown the last 4 to 5 years is an exceptional kind of a trend. From being I think at a point where the stock was 200 or less than 200 rupees towards 1800 plus mark. So it's bound to be that the stock would go into a phase where the correction or the time-wise consolidation could extend for stocks like CDSL. But I think these are very good opportunities from a long-term play. I think buying on dips would be a good strategy. I'm not sure whether the current low would be the major low for the stock price, but in case if the stock drifts lower, you should be ready to average further for CDSL. My sense is that on a longer term basis, the stock should be good for coming back to that 1800 to 1900 plus mark as well.
All right, Kunal, a lot of queries actually coming in for you. Actually, let me take this one to Sharmila, because it's on Vedanta. It's on Vedanta's demerger. So instead of Kunal, I'll take it to you, Sharmila. Srikanth is holding Vedanta 100 shares at a price of 320 rupees per share. He wants to know what's the outlook for this counter, given the fact that there is a demerger of the business. How should he actually view this one? 320 is a buy price for Vedanta.
First of all, this buying price is good, and secondly, as you rightly mentioned, they are going in for a demerger. What it simply means is that what market is looking at this point in time is that when it breaks into whatever the entities that it has planned and the roadmap that it has, the sum of parts of all those will be more than what the current market price is at this point in time. And given the fact that some of those entities will be very attractive metals or industries that that you sort of which investors like, there is a good possibility of that happening. The only thing is that when it happens, how it happens, what is the modality, that is all something that will play out in the next couple of months. So I think you just need to be patient. Your buying price is very good, and that thinking is right, that you need to see how this demerger works out and where it takes the stock price. So for now, I think just stay put.
Hold and wait and watch is the call coming in for Vedanta from Sharmila. Kunal, coming to you, our viewers writing to us, Mr. Saravanan is writing to us from Chennai. Stock in question is Adani Ports. He's asking if he should continue to hold or sell. We don't have quantity and buy price, but the stock in question is Adani Ports. We understand that the viewer has a holding in this. What's the outlook on this stock?
So bullish on Adani Ports. I think this is the only stock, or maybe one of the only few stocks from the Adani stable, which I believe is considered to be low to moderate beta and goes into strong periods of uptrend. I think the base formation the stock has shown the last 3 months, 1050 or 1100 kind of a base, I think is a very good or a solid support for Adani Ports on the long-term charts. And we know the history of such stocks, that when they gather momentum and when there is a lot of positive news flow, that these stocks can surprise with a lot more positive upside. So it's best to identify a zone where the risk reward starts to look a lot more favorable, and then leave the news flow on itself. Once the news flow starts to look a lot more attractive, these stocks would pick up pace. Good buy on Adani Ports, I would suggest, at current levels.
All right, let me take this next query then, and this one is coming in from Deepak Dave, writing to us from Gandhinagar, wants to know about Sona BLW or Sona Comstar. Sharmila, he has some of the shares at a price of 545 rupees per share. Should he continue to hold on to this counter, look to exit? What's your take coming in on Sona BLW?
So the outlook going forward is a little uncertain for a lot of the auto and auto component makers, because ultimately what their export basket is, how it's going to get impacted, where they have their factories. There are going to be a lot of changes for them. That said, Sona BLW is, to my mind, a good quality mid-cap play. So if you can sort of ride the uncertainties, then stay put. Otherwise, if your view is very short term, it might be a good idea to exit.
Okay, so that's the take on Sona BLW. And Kunal, coming to you, our next query is coming in from our viewer, Mr. Vivek, who's writing to us. The stock in question here is Tata Consumer. His holding price is 590 rupees per share. He's asking what target to keep in mind. So he's asking for a target level as well, or he's asking if he should just exit his entire holding in Tata Consumer right now, and he's confused about what to do. What would be your advice for Tata Consumer?
So the buy price was
590 rupees per share.
I think it's fantastic, because you are almost doubling your returns in terms of the investments for Tata Consumers. There are two ways when I look at the charts for Tata Consumers. After this last 2 days of up move, the stock is bound to get back into a bit of a corrective phase. That could happen for the stock, because many of the other FMCG stocks are going through their own phases of time-wise, price-wise consolidation. So it's bound to be that after 2 or 3 days of strong price action, you might see the stock going back to a corrective phase. But then what these moves they do, they eventually lead into the stocks going back into a very strong multi-month, multi-quarter uptrend. So your time frame has to be important over here. If you're looking at this specifically as just a trade, and if you want to exit the stock and repurchase lower, you can do it at current levels. But if you're looking at this as a time frame of then the next 1 to 2 years, then I believe the Tata Consumers could actually turn out to be a more leadership stock in the entire FMCG basket. So you can hold on to the stock if you're looking at this as a pure long-term play. But as I said, depends on your time frame.
All right, so that's the take coming in on Tata Consumer, given the fact that our viewer is sitting on a very healthy set of profits when you talk about that particular counter. Let me take the next query then, and this one is coming in from Anjali, who's a senior citizen, writing to us from Chandigarh, wants to know about Adani Power. The buy price is 645 rupees per share, about 300 shares in the portfolio. What's your take, Sharmila? How does Adani Power look to you when you talk about the fundamentals, given the fact that in this latest bout of recovery, we saw power as a sector actually see a good up move?
Yes, as a sector, power is a sector that I do like. That said, Adani Power valuations still seem a little expensive. But if your view is long term, you can stay invested.
On Adani Power looking slightly more expensive in terms of valuations to Sharmila. Kunal, coming to you, and this is our viewer Manjula who's writing to us from Chennai, asking if you could advise one or two stocks in the entire shipping sector for a period of 2 years and what price to enter them at, and what's looking good to you from the entire shipping space, the likes of SCI, Cochin Shipyard, what's looking good over there?
So Mascot Dock is something which I would suggest at current levels if you have that kind of a time frame. It's been one of the most strong stocks on a relative basis. Looks attractive even at current levels. And my sense is that if there is a strong cyclical turnaround for the defense slash shipping names, you could probably expect that these stocks may start to look a lot more attractive. Cochin Shipyard, GRSC, both of these stocks, they also are very attractive in terms of price point. The only catch is that these stocks are very high beta, so you may be ready for swings of 10, 15, 20% also in a short span of time. So if that suits your appetite, you can go for that as well.
All right, so that's the take coming in on some of the shipping counters that our viewer can look at. Let me take this next query then, and this one is coming in from our viewer Amit. Amit wants to know about Siemens. Does it make sense to enter right now at current levels? He's planning to invest about 40,000 or so in this counter. What's your take, Sharmila? Siemens, a good one to actually go ahead and buy right now. A lot of business restructuring has taken place in this one. And also, let's not forget that this is a major player when you talk about the capital goods or capex theme in India.
And it has corrected a lot. So there are 3 good reasons for looking at Siemens. So yes, I think go ahead if you're a long-term investor. These are possibly the kind of stocks that you may not have had and would have wanted to own, and this is possibly the best time that you could be buying them.
Okay, so possibly the best time for Siemens. That's the outlook coming in. Kunal, coming to you, stock in question is UPL. Now our viewer, Mr. Mahesh, who's a senior citizen, is writing to us from Delhi. And the stock in question is UPL. He holds 450 shares of UPL at a buy price of 585 rupees. He purchased this stock about a year ago. He's asking if he should hold or if he should exit his entire holding in UPL. 585 is the purchase price. What's the take on the stock?
I think it's definitely a good time to hold on to the stock, because on the monthly charts, there are a lot many indicators which are coming back into a positive terrain for UPL. Now, the last 3 months, the stock has been sideways, but that's what happens when a stock changes its beta. It goes into strong periods of uptrend, and in phases of strong periods of uptrend, there is a phase of pause or a relative outperformance. For example, in the last 3 months, we've seen the condition for the markets as well as the mid caps and large cap names. So I think in that sense, UPL has managed to outperform on a relative basis. I think that's a very strong signal that you're looking at a potential much more stronger upside for UPL. I would suggest that looking at the current chart structure, you should hold on to the stock.
All right, so that's the take coming in on UPL. Let me take this next query then, and this one is coming in from Naresh. He's writing to us from Pondicherry. He has Varun Beverages at an average price of 345 rupees per share. Right time to go ahead and look at averaging this particular counter. What's your take, Sharmila, on Varun Beverages? Because this one has been in the news of late, given the fact of the businesses, also capacity expansion. What's your take on Varun Beverages? Do you think now is the right price to average this one and also average and hold on to this one?
Definitely hold on. And, in terms of timing, perhaps this is the right season to be looking at Varun Beverages, because as we get into summer, we will see that the consumption for the aerated drinks goes up, and Varun Beverages is right there supplying to all the major players. So this is a stock that I like. Again, it has corrected. You could wait and buy it, but I think definitely hold on to what you have, because these are, I think, precisely the kind of stocks that in the near term we should be looking at, to my mind.
Okay, so that's the take coming in on Varun Beverages. But on that note, that was the last query that we could squeeze in today's edition of Buy Now, Sell Now. So Sharmila and Kunal, thank you so much for joining us and addressing all our viewers' stock queries patiently and guiding them with what to do with their portfolio queries. But on that note, we'll wrap it up on this edition of Buy Now, Sell Now. It's a goodbye from Cheryl, me and the team that put this show together. But as we bid you farewell, you stay tuned to ET Now, because Markets at Noon is up next.
If you like this video, then like, share and subscribe to ET Now.